Greetings, y'all, and let's have a review for the final on Accounting 1110 on the topic of short-term notes payable. Our goal in this pencast is going to be to review all the entries that relate to short-term notes payable. I'm going to hop right into some facts. On November 15th, a business borrows $10,000 on a 90-day 5% notes payable. We're going to make all entries assuming a calendar year end. But first, how about a visual of what's happening on this? Here is December 31st, our calendar year end, and here is November 15th, the day we borrow the notes. The first question we should perhaps entertain is, when is this note due? Let's be a review from your notes receivable as well. Let's see. We borrowed it in November, so we'll start with November. There are 30 days in November, the 30th of which is my birthday. Yay! That has nothing to do with this. The note is signed on the 15th of November, so it is outstanding 15 days in November and is outstanding 31 days in December. That means the note is outstanding 46 days if you have a calendar year end. Then in January, it's outstanding another 31 days, and we're up to 77. We have to get to 90 so I can see that we're going to hit it in February, because I only have 13 days left. The note is due February 13th. So our note is due February 13th. When is this note due? The answer, February 13th. So, now that we have a handle on that, let's just get a little picture of it. This note is outstanding, we said, for 46 days, right here, in this calendar year. And the difference between 46 and 90 is 44. So it's outstanding 46 days in one calendar year and 44 in the other. I would assume there's going to be a little more interest in the first year than the second. How about you? Well, let's start with our entries. Our entry on November 15th. On November 15th, the note was issued. This is the issue date, correct? So let's make this entry, and we're going to debit cash. Wazoo! We have $10,000. Notes payable. Short-term note, $10,000. So, may I ask you this? Is there an adjusting entry that you need to make on December 31st? And if so, what that might be? Go ahead and put this on pause and see if you can come up with it. If you didn't come up with it and you're taking a peek at this for help, how does this look? Some interest expense and some interest payables due December 31st. How much? Here's how I calculated it. 10,000 times 5% is interest for a year. We're holding it for 46 days of the year, and we'll use a banker's year. I don't know why, but that's what we do. 360 days. So 10,000 times 5% times 46 divided by 360 will give you $64. That means that our interest expense and our interest payable for the first part of the year for 46 days is going to be a whopping $64. Now, let's move out to payment. Let's record the payment entry. First of all, you know it's due on February 3rd, so the payment date would be February 3rd. I've said 3rd, I meant 13th. February 13th. Put me on pause and record the payment entry. Welcome back. I've set up some accounts, but I haven't put any amounts in. My first step on this would be to calculate maturity value, 10,000 times 5% times the whole 90 days divided by 360. Says total interest for the period is 125. So that means I'm going to have to pay a maturity value of 10,125. 10,000 principal, 125 interest as we just calculated. So there's my cash amount, 10,125. I'm going to take these other accounts one at a time. I know my note payable is 10,000. That's how much I borrowed. And I know last year I accrued $64 interest. So the amount that I must be out of balance by is interest for the current period. And you can calculate it, or you can simply add up 10,064 and subtract it by 10,125. No matter how you do it, it comes up to $61. So this is the entry that records payment. And it puts $61 worth of interest in the second year. So we recorded borrowing the money. We accrued interest. And then writing really teeny tiny, we recorded the payment. We got rid of our interest accrual, our notes payable, paid off the note in full, and the difference was interest expense. You could have calculated that for 41 days, just like we did here, and come up with $61 as well. True accountants would like to do that, but on a final, if you're in a hurry, go ahead and plug that sucker. All right, then. Those are all the entries relating to short-term notes. Thank you for joining me.